Hi guys, David from Reside here, just jumping on to discuss stress test with you. You might hear a mortgage stress test when you're going through your mortgage application, but I just want to explain a bit more in detail what it means. So a stress test is a process used by a lender to determine if you could still afford your mortgage if rates were to rise. It's essentially a what if scenario that lenders apply just to make sure you are financially resilient enough to still be able to afford your mortgage payments if rates were to rise. How it works is a lender will apply a hypothetical rate to your mortgage payment just to make sure that if rates do reach that level, then you can still afford it. In simpler terms, if you're looking at, say, a rate of around 4 to 5% now, it will be affordable. But then if rates do go up to 8, 9%, we never know if that's going to happen. They still need to make sure that your mortgage would be affordable. Now, why that's important is there was obviously a financial crash in the past where a couple of banks failed, i.e. Northern Rock, and rates skyrocketed. A lot of people was on sort of very low rates and then couldn't afford the mortgage payments, which caused the housing market crash. So now lenders have to ensure that they are being responsible lenders. And this is why they have to apply the stress test to make sure that your mortgage is not only affordable now, but would be affordable in the future. This just ensures that anyone taking a mortgage out or borrowing money isn't overextended. So with the stress test, lenders will factor in quite a few things. So they have to factor in your mortgage payment, which will be on the hypothetical rate. They also have to factor in the cost of living, which just includes day-to-day spending, bills, etc. Now, these figures are generally taken from the Office of National Statistics, and they also factor in your current liabilities, so any credit card payments, any loan payments, etc. So this is all factored into the stress test. So although when you get a mortgage illustration from your broker, which says your monthly payment is going to be this, in the background, the lenders do a stress test which factors in the things that we've discussed. Now, in March 2025, the Bank of England actually eased this stress test. Now, what does that mean? It just means that lenders, the stress test they used, the hypothetical rate was lowered. Now, the good thing about this is it just means that clients could have more borrowing power, which means that they can borrow more. And when I said hypothetical rate, there is a bit of flexibility in this. Although lenders have to sort of have the stress test, dependent on their risk and how much they're lending, they can be flexible with this. So it's not the same for every lender, which is why when you speak to a mortgage broker, you might find that some lenders can borrow more or less based on the same details. So yeah, lenders can be quite flexible around this, which is why it's always good to speak to a mortgage broker to fully understand your full borrowing power. And one last thing I would say is when you are getting a mortgage or looking to borrow money, always please speak to someone that's financially qualified to give financial advice.